All right. Well, good afternoon, everyone. This is Scott Thompson. I'm an education coach here with Schwab Coaching. Great to be here with you today. Appreciate you taking some time out of your busy schedule to be here with me. Hello, Greg. Hello, Chris. Hello, Scott, and everyone else that's joined us here. There's the bell. Just the market just closed. So Ben Watson is out there in the chat. Ben and I are been working together for a long time. So we look forward to having you in our webcast today. Have you ever wondered about, how to create your own trading plan? We're in lesson 4 of our 8 lesson series. And today's topic is plan your trade and trade your plan. But the main point here is that I'm going to give you 6 key components that you should have in your own investing plans, okay? Before we start there, of course, you can follow me and Ben on x.com, Scott Thompson CS or Ben Watson CS, and post some questions there and follow some great content. Before we get going here, let me go over some important information. Remind everybody that our presentation today is for educational purposes, not a recommendation of any particular stock or investment strategy, which we are going to be covering today. Schwab does not recommend the use of technical analysis as the sole mean of investment research. We all are and will be using the Paper Money software platform. There are some significant differences in the Paper Money compared to your live money, one of which I'll show you today. And then also remember that stop orders are not guaranteed to execute at the stop order trigger price. And it could be significantly lower than that. We'll be talking about stops a little bit today. The other thing, too, we're going to be talking about a concept called Schwab stock slices just briefly. Schwab stock slices are not intended to be a recommendation or investment advice, and there are specific risks or unique risks associated with buying fractional shares. We also have, remember that past performance is no guarantee of future results, and investing involves risk, including the loss of principal. Before we get into our agenda, or our lesson topic, let me show you our stock overview of the different lessons. We'll let that sit here for a minute, but let me share my screen and make an announcement. Ben Watson and I will be at the Anaheim Market Drive, which is on the 22nd of November, coming up here in a few weeks. You can register for that or get more information about the live events on our Schwab coaching page, which is at schwab.com/coaching/live events. And then December 11th will be in Houston, and December 19th will be out in Miami. So look forward if you're in one of those areas. We'd love to have you join us. You can get some more details by going to this page here. All right, let me jump back here now to our slide deck and to talk about the different lessons first. We're on lesson 4, which is plan your trade and trade your plan. We're going to be looking at some investing styles, talking about the 6 key components for a trading plan or trading rule set. I'm going to go over a specific rule set that we created actually several months ago and give you some details on that. And let me give you first a concept that's important for you to consider, because the rules that we go over today, may or may not work for you. And here's a 3-word little mantra that I like when I'm creating my own trading plans or my own investing plans, is to review, refine, and then retest. What's interesting is as we go through some rules here in this particular webcast, you'll find that, some of them may not be right in your, line of sight, or they may not resonate with you. So that mantra again is review, refine, retest. But I found that most people need someplace to begin. And so that's what I hope to give you today as a beginning point with some specific trading rules, and obviously not a recommendation of how you can invest, but it is a great starting point. And I'm going to give you some homework assignments to do in your Paper Money account to practice doing that. So let's take a look at our agenda today. We're going to go over the investing styles. This is just to give you a little bit of a broader overview. This is stock investing for beginners, so some of you may not be familiar with these different investing styles, so we'll hit those real quick. Then we're going to talk about the components, those 6 key components of the trading plan, which involve, an objective, what to buy, when to sell, how much to buy, and then kind of a daily routine. So we'll get into that in more detail. And then we're going to go over those sample trading plan rules that I've created for our webcast and for our class here, and then we'll take a look at a sample trade. Hopefully the example I was looking at stayed up. We had a little bit of a pullback there at the end of the day and then a rally going into the close a little bit. So let's jump in. Number one. So remember back in session one, which was about 3 weeks ago, in lesson one, we talked about why people invest or why we might consider investing. And I just want to hit that really quickly. The time is your greatest asset. We did an example here. Marie and Anna invested $3,000 each year on January for 10 years, regardless of whether the market was up or down. Marie started 20 years ago. Anna started 10 years ago. And then the graph on the right side shows the difference between their investment just after that time. So what's interesting here, and again, reminder, past performance does not guarantee future results, but the market has done very well. We did last week when we were talking about investor psychology, we talked about the different performances over the last 5, 10, 15 years of the market. And, one of the great things about the market is that time in the market, that compounding is a great event. And doesn't mean the market can't go down. We've all seen that, I think, in 2008 and 9. We had a little bit of pullback in between 2009 and here. We've had a little pullback this year in April. So the market doesn't always go up, but the reason that people invest is to help build that wealth. Now, let's talk about these different investing styles. Now, one of these styles here may resonate with you, but one of the things I have found is that you don't have to lock yourself into, I'm a growth investor, or I'm a value investor, or I'm an income investor, or I'm a trader. Last week, we talked about traders invest and investors trade, right? So, as you look at this, you might decide that, hey, I could put a portion of my portfolio in any one of these categories, and that would work. You want to look at your situation and see what would work best for you. But let's just kind of talk about these in general. Growth investing is an investing style that focuses on stock appreciation and less on intrinsic value, less on dividends. And one way to think about growth investing might be buy high and sell higher. I think we got locked in, at least I did when I first started, is buy low and sell high. I always wondered, well, where is low? And man, this stock that's been uptrending for a few years doesn't look very low at all, right? So kind of get past that buy low, sell high. That's not really part of the growth investing mindset. That's part of the value investing mindset, which is the next one I'm going to look at. Value investing is a style that makes money through stock appreciation, but focuses on stocks trading at a relatively low price. Maybe they've been beaten up. Maybe they've been downtrending for a little while, but they're still sound fundamentally. And that's an important concept. In our next lesson, we'll be talking about what to buy, and we're going to go over some fundamental analysis. But this value investing is that kind of a classical concept of buy low and sell high. And then we have another one called income investing. Income investing is just what it sounds like. Income where your focus is on income generation, usually through dividends. If the stock goes up in value, fantastic, but that's not the main purpose of an income investing style. It's more to generate those dividends on a regular basis. Now, as we start to get ready to jump into now creating a trading plan, you could have a plan for each one of these. You might have a growth investing plan, a value investing plan, an income investing plan. You might have a swing trading plan. You might have different plans for different styles of trades that you want to do. And I think those are all great ideas. Now, in the investing plan, it's important to understand what the plan is. It's like a recipe, okay? And, if you've been cooking for a long time, maybe that recipe's in your head. But when we first start cooking or first start trying to make a cake, or Ben Watson is a very accomplished chef. And so, he probably has some great ideas already in his head. He doesn't have to follow a plan per se. But when we first start investing, it's a great idea to have that recipe or an investing plan. And here are those 6 components that I said I wanted to share with you. The trading plan should include, what's the objective? I think that one's overlooked a lot of times because you might come up with, well, I need to know when to buy. That's all I care about. No, it's not all you care about. You need to know what the objective of that plan is. If it's a growth investing plan, which is what I'm going to be showing you today, that objective is a little different than, say, a value investing plan might be, or it's different than that income investing plan might be, and it's definitely different than a trading plan might be with, short-term targets or goals. Okay, so you want to have an objective, and I'll share that with you here in just a moment. Okay, you want to know what you're buying. How does a stock qualify to be on what we call a watch list? Now, a watch list is just a list of stocks that you're willing to invest in. And those stocks might give you a signal of when to purchase it at different times. But you want to have an idea of what you're going to be trading, what you're going to be investing in. So we refer to that as what to buy. You want to know when to buy. Now, this is a very important one when you start developing a trading plan that is different than, say, just like a scheduled investing objective. Like we're going to share 2 plans with you there on that one that we've already talked about, actually. But some plans, the objective might just be, I'm going to buy some shares every Monday, or every first trading day of the month, or whatever, every time I get a paycheck. So the timing might be very different of when to buy depending on how that plan is put together. You want to know how much to buy. I tried to emphasize this last week. I think this is very critical. We're going to hit it again in a few weeks. But how much to buy? You can write this down in your notes somewhere. I do not care what kind of plan you have. If you are uncomfortable with the risk that you're putting on the table, none of this will matter. You just won't follow any of the rules. All right. So how much to buy, how much you're risking on the trade. Those are very important concepts. Also, you'll have a when to sell. Now, the objective of this plan, for some of you, in fact, we kind of introduced this plan it's about 3 months ago, back in June, when we very first started our Stock Investing for Beginner webcast, and we're going to reintroduce that plan today. But when to sell, that is going to be very important for you as well. Are you able to actually follow the rules? That's why I think the review, refine, retest is so important, because you're going to create a plan, and we've got an example plan here. Again, not a recommendation, but we've got a plan that you can be a starting point for you in your paper money. And then as you trade that, now some traders will feel like, if I can do like 20 example trades using this rule set, then go back and evaluate, right? Then I can review my results. And then I can make some tweaks, refine, right? I can refine those rules a little bit, and then I can retest. I can make the tweaks, rewrite it down, and then I can retest those, do another 20 trades. And then you can get dialed in on a plan that works for you, that you feel very comfortable with. The last component is just your daily or weekly routine. What are you going to be doing on a daily or weekly basis to help you facilitate the plan, okay? Now, last component here before we get into the plan itself are our emotions. Emotions can be our downfall. Following a plan can help reduce those emotions. That's one of my favorite little mantras. Plan your trade and then trade your plan. And that plan is going to be different for probably everything you do. But I think beginning with the end in mind makes a lot of sense, and it's important. All right, so let's jump in here. And I'm going to be going between the rules, which I'll show you, and the Thinkorswim platform, because I want to give you some components along the way here. All right. So let's start off here. Now, this plan is simply called 2 green arrows. Okay. You'll get an idea of what the 2 green arrows are here in a minute, and I will show you how to set up your chart. Now, before we get too far into here, I have already included, there's a link or a script in the description that has this chart that we'll be using, and I created a scan for our webcast today. There's a link for that scan in there as well if you want to do that. It's really quite a simple chart, so I think you could build it on your own, but seems like everybody likes those scripts these days, and the scripts aren't guaranteed for accuracy or time. All right, but let's jump into this here. There's a question in the chat there about how can I download the presentation. You can't really download the presentation, but the presentation is being recorded, and you can go back and watch it as often as you like on our YouTube. You can use the Russell 3000. We can reuse whatever list we want. Again, this is just a really simple starting point, and this might be one of those things that you refine along the way. Now, I want you to remember, or make sure you read this last little part. We're going to buy and hold uptrending stock until when? Okay, what's the exit for this plan? Well, until the trend changes. Okay, we'll get into that in just a minute of what that constitutes. But now our objective is to buy and hold uptrending stocks. What we're going to trade for now is the S&P 100. Now, let me jump over to Thinkorswim and let me show you where you can find that. So if you go over to the Thinkorswim paper money or the live money, you can go in on the left-hand side. There's these gadgets. If you have a gadget over here, which the default normally will have a watch list gadget, but right to the right of where it says watch list, if you click on that box, you'll get this menu item. And there's a whole bunch of public watch lists available for you. But if you come down here to public R through W, you will see S&P 100. Okay, and so that's the list that I'm talking about in our plan. Okay, now while I'm here, I want to show you we've done 2 other plans already. And I talked about these in lesson 1 and lesson 2. Is the sample plan number 1 is we're buying every single trading day, is we're buying some shares or partial shares of an ETF that tracks the S&P 500 and the NASDAQ 100. Okay. Our second plan is to use that Schwab stock slices that we've already talked about. And we've talked about that that's not investment advice. That's just what we're simulating here in our paper money. And we're investing $50 at the start of every week in the top 10 holdings of those instruments that track the S&P 500 and the NASDAQ. And those are right here. And these stocks, we've been doing this really since the 9th or so of June. And I'll just kind of show you over here. If I click on the P&L open, you can see the different purchase dates over here on the left side. And you can see that I did it again. You know, I bought some shares, partial shares. These quantities are very small, right? 0.1 shares, 0.01 shares, 0.0005 shares of Costco. Okay. But you can see the date of the purchase here. I usually do it right at the open. And then, you know, we just track those. And so, you know, that's our plan number 2. Plan number 3 is what we're going to be going over today, is this 2 green arrow plan. Okay. So I wanted to show you where the watch list was on Thinkorswim. This is the watch list we're generally using, but you could really use any other one. And we'll expound or expand on this as we get into some fundamental analysis that we're going to do next week. Okay. All right. So let's go back here over to our slides and take a look at another parameter that we've added to what to buy. Now, we're pretending that we have a $10,000 portfolio. So it's a rather small trading account. Again, for someone who's beginning to invest, they may not even have that much. They may even have like $100. And so there's different ways that you can start. We talked about that a little bit in our lesson number 1. We talked a little bit about it in lesson number 2. But you know, you can start. In our portfolio that we're using this green arrow plan for is a $10,000 portfolio. So what we did is we decided, you know, the S&P 100 has some pretty expensive stocks on it. And in the beginning, we decided to cap it out at about 220. Well, the market's gone up pretty nicely over the last couple of months. So I just want to show you, you know, there are other stocks in there. If you wanted to have a different maximum, you could do that. All right. So that's the number 1 objective. Number 2, what to buy. Okay, what's next? What's next in that process of finding and doing some trading? Well, the next process is when to buy. So when are we going to buy this stock that's in the S&P 100? Well, let's do our chart setup. Okay, we're going to use a 3 to 6 month daily chart. We're going to use a 50 period simple moving average with breakout signals. That's what the green and red arrows are. And then we're going to use an 8-17-9 MACD histogram with breakout signals. Now, let me show you how to set that chart up. Okay, so let's go back over here to our Thinkorswim platform and go to the chart page. And if you've been on Thinkorswim before, this is probably what your default chart looks like. Okay, it's got a bunch of kind of lines in it. Usually on Thinkorswim, the default's a candle chart, which is what we're looking at here. We'll talk more about that in 2 weeks. We'll talk about technical analysis. And this is what the chart looks like. I don't like this look. Okay. So let me show you how to change it to what I like to see. And you can do whatever you want with yours, but I'll show you what I'm going to do. And then again, there's a link in the description for this chart setup. If you don't want to go through the process, you can, open that shared item and have the chart. Okay. First thing, let's go over here on the general chart. I like to pretty much leave everything on the same how it is on the general. The price axis, I like to add some space on the top and usually on the bottom. So I like to go 10% on the top and 5% on the bottom. What that does is just kind of, it brings the chart in a little bit and gives a little more room on the top. So like when we're projecting potential targets or something, it's easier to see that information, okay? So 10% up, 5% down. On the time axis, one of the things I do like is, on our chart over here, you can see the price action is pegged against that right side. There's no space out there. So I don't know if there's earnings in the future. I don't know if there's a dividend in the future. So what I like to do is I usually like to add about 20 bars to that right side of the chart. That way, if earnings are in a week or two, then I can see the little earnings icon on the chart. All right. If I go to appearance, this one has a grid. And this is, if I uncheck the grid, it's probably impossible to see here on the video, but when I uncheck that, let me make that black. So can you see those little grid lines in here a little bit? If I uncheck that, those go away and it's just this really nice clean chart. And that's what I like. So I'm going to uncheck the grid on the appearance. And then when you go to equities, this is just what your stock chart would look like. I would leave the corporate action on that. That's where you can see where there's a dividend or like an earnings announcement coming up. Some people will uncheck the volume, especially if they're looking at stocks like an S&P 100 or S&P 500 that are, some of the biggest companies in the United States. We already know that those generally have a lot of volume. So, volume in this particular plan isn't a critical component. So the fewer things you can have on your chart that are not involved in your direct buy decision, I find that to be a little bit easier way to look at your chart. So I'm going to uncheck that one. And then there's one last thing I wanted to do. Where was it? Price. It's on time. So on the time axis, all of these vertical lines, I don't like all those. So I'm just going to uncheck all of those. And again, this chart is there. So now I've got a nice clean chart and it's a 1-year chart. And we said, go with like a 3 to 6 month. So the way you do that time change is just go here to the day and you can go to your time frame right there. And then I'm just going to choose 6 months. And that's really the same chart as a 1-year chart. It's just zoomed in on the last 6 months. Okay. So now we have our time frame, our chart's nice and clean. And now I need my indicators on here. Okay. The indicators, again, if we go back to the trading plan real quick, the indicator said a 50-period simple moving average with breakout signals and an 817.9 MACD histogram with breakout signals. Okay, so let's add those to our chart. All right, so in order to add a study, what would you use? Well, probably where it says studies. So if you go to studies, I think the easiest way to do this, now you can also click on some of these other things that people will show. I like to go to studies and I go to edit studies. And then because I know what I want a simple moving average and I want a MACD. If you just start typing in the name of the indicator, so like simple, and I'm not even going to finish typing it because right here I have my simple moving average. So I'm going to click on that and add selected, and that's going to put it over here in my price area. Okay. And you'll notice it says close 90 no. Well, what's all that? Well, let's go look over here. Let's modify this because we don't want a 9-period moving average. We want a 50-period moving average. So we're going to change our length to 50. And the default says show breakout signals. No. Well, what is the breakout signal? That's just a red or green arrow. That's all that is. So we're going to turn that on. Yes. Okay. Okay. So now I've got my 50-period moving average. What else did I want on my chart? Well, a MACD histogram. So I'm going to go back over here and search for that because there's hundreds of indicators. In fact, just kind of as a note, if you want to know what something is, just click on the little question mark over here, right? But let's type MACD And then you have several different MACDs to choose from. We're just going to use this MACD histogram right here. Again, if you wanted more details, click on the question mark and a whole bunch of information will come up on what a MACD is. Or you could go visit Cameron. May has a webcast on Fridays called Advanced Charting, and he goes over all sorts of different indicators. And we have a class called Getting Started with Technical Analysis, where we talk about some of these basic indicators as well. But we're going to go MACD histogram, add selected, and you'll notice here, this one says 12.26.9 exponential. Well, we're going to use a little bit faster MACD. And the way we make it a little bit faster to react is we just change these numbers a little bit. Okay, I'm going to click on the little gear, and it's not 12.26.9. That was the original setting that Gerald Appel used, and then he also used one called 8.17.9, which is a little bit faster to react. So the ups and down movement of the histogram will go a little faster. And then again, show breakout signals, the default's no, and we want to use yes because we want to see the arrows on there. So we're going to click OK. And now I've got my indicators all set up, and I'm just going to save this as a set. Okay, and you might call this 2 green arrows. Okay, I've already saved it, so I don't want to save it again, but you could name it 2 green arrows, click save, and then that would be in your studies, and you could actually load the study, right? So we're going to apply this and click OK, and now that's what the chart looks like. Okay, and this link again is in the description. If you want this chart, it's already there. All right, now that we're on Apple, let's go back over to our trading rules. Let's go through these a little bit more quickly now that we've got things set up. All right, so chart setup, 3 to 6 month daily chart, 50 period moving average, 8.17.9. Okay, now we've got the chart built. What's going to cause us to take action? Now, in your own notes, I would love to have you write down what would have to happen tomorrow for me to take action, to buy this stock, to do this trade, however you want to describe that. And again, this isn't a recommendation. It's just, this is the process that traders will go through when they're trying to define exactly what their trigger point is. One of the things that was so frustrating for me when I first started investing and trading was I had this kind of vague idea of what my buy signal was, but I wasn't really sure about it. And so, you know, when I looked at it and I thought I saw it on the chart, I would sit and fret for sometimes 20, 30 minutes trying to decide what to do with that stock. Okay. And it's so frustrating. So what I want you to do is just pick something. There's no perfect buy signal. There's no perfect entry signal. There's no method of getting into a position that is guaranteed every single time to make money. You are going to have some losses. And as soon as I actually got that, I thought, oh, okay, well, there's my buy signal. I can trade it. Now I just want to make sure I position size it or buy the right number of shares so that if it does go against me, I'm okay with that. It's not going to kill my account. It's not going to make my account explode. Does that make sense? So buy signal, very simple buy signal. Green arrows on the rising 50 period moving average and the MACD histogram. That's it. That's the buy signal. When you see that on the stock in your watch list, traders would say, oh, that's a valid entry. I could buy that today. Okay. Now, how much to buy? Now, we'll talk more about this in a few weeks, but how much to buy? Position sizing, we have a really, really simple method that we're using here. Do you remember the account size we're trading? The account size that we're trading in our paper money is $10,000. So one very easy method of position sizing is to invest no more than, say, 5%. Some people go 10%, some people go 8%, but we're going to use no more than 5% of the account value in any single position. So what does that mean? Well, if I have a $10,000 account times 0.05, I could invest up to $500 per trade. Okay. So really simple method of doing that. I've actually shown a couple of examples of this already in the last 3 lessons where we've gone and actually placed some trades using this very simple methodology. All right. Now let me show you another way that traders, more traders use this method than, say, investors. Investors will use kind of this allocation model, but if you want to trade something where you maybe have a downside exit and an upside target, something like that, then what they do is they look at risk per share or risk per trade. And so this one here, again, we'll talk more about this in a couple weeks, but the risk per trade, A lot of traders will use this 0.5 to 1/4% of the account value. That's the amount that they would be willing to lose if the stock went against them. Not invest, but lose. Okay, and the way this works is this. If I have a $10,000 account and I'm willing to lose, let's say 0.5%, then I could risk up to $50 per trade. And so that's how much I'm willing to lose on a trade. And then to determine how many shares to buy, you would take your risk per share, which is the difference between your purchase price and the initial stop price. Again, remember, stops aren't guaranteed to execute at that stop price. That's just the method that traders will use to kind of get a ballpark there. Here's an example. If I bought a stock for $125 and had a stop order to get me out if it goes against me at 113, I'd be risking $12 per share. And then I would say, well, how many shares can I buy if I'm risking $12? And this is the formula right here. Again, I'm going through this fairly quickly, so you may want to go back and watch the recording and then pause it as you go through and kind of get these formulas down, because it does take some practice right at the beginning. Give yourself some time. It's okay that you don't understand or even get all of this all at once. It took me a long time to get this, okay? So risk per trade divided risk per share. If I have $50, that's what I'm willing to lose on the trade. I'm getting in at one price and I'm risking about $12 per share. Divide those and I could buy about 4 shares. And then what we would want to do is do a check. You know, does that meet my maximum allocation per trade? And so in this case, $125 divide or times 4 would be $500, and that would fit not putting more than 5% of our portfolio in any single position. Okay, so that's the plan and how much to buy. All right. Now we'll go through an example of this here in just a moment, but let me finish going through the rules and then we'll do some example trades. All right. Now, when to sell? Like I said, I introduced this plan about 3 months ago in June. Maybe that's 4 months ago now. But in June, we talked about our initial stop order, which is when to sell, number 1, and our stop adjustment, which kind of takes care of everything else. However, as we had been in some trades for a little while, people said, well, I've got some nice profit on these. Could we have a profit target order to sell? And you can. We're just not going to cover it here today, okay? But the initial stop order is set the initial stop 1% below where? Below that 50-period simple moving average, which is easy to see on the chart. Again, we'll go through an example or two and you can see that, all right? And after we set that initial stop, how about our stop adjustment? When do we adjust our stop? If you remember the objective of the plan, the objective of this plan is to buy and hold what kind of stocks? Uptrending stocks. And in this case, in the S&P 100, until when? Until the trend changes. Well, basically what we're doing is we're saying to ourselves, if the trend changes, the stock's going to be closing below that moving average, and that's basically our second stop adjustment. If we get 2 red arrows, and again, I'll show you what that looks like in just a moment. Okay, when stock closes below the 50-period moving average, that's usually the last arrow or the second one to go red. We're going to put the stop 3% below the low price of that particular day, trying to give the stock a chance to keep trending. Does that make sense? You know, we don't want to just get out, because how many times have we seen the stock maybe dip below the 50-day moving average, 2 days later it's back above and off to the races again. But, you know, if we get out just because it closes below the moving average, we may not be in the trend, and we're trying to allow that trend to develop. Now, that sometimes will take months before it closes below the moving average. So we have another stop adjustment rule that we can use. Is called the new 2 green arrow buy signal. If I'm in a trade already and then it gives a new green arrow buy signal, well, if I didn't own the shares and I bought it today, then I would put the stop 1% below the moving average, which is kind of that stop adjustment rule, okay? And we'll do a whole bunch of these trades over the next several weeks together. But that's our when to sell. And then the last part of the plan is our daily routine, okay? Our daily routine, very first thing that I want to do is review open positions for that stop adjustment signal. Now, just want to throw this out to you guys. What do you think? How long does it take to see on the chart whether I've got 2 red arrows or not? And we're going to do this together here in just a second. It doesn't take any time, less than a second, and you can determine whether there's a stop adjustment signal. is either 2 red arrows or a new green arrow on the MACD. That's usually what you're looking for. Okay. If there's not there, then there's nothing for us to do that day. We're done with that part of our daily routine. The next part of the daily routine, guess what it is? Review our watch list, in this case, the S&P 100, review our watch list for what? Buy signals. You know, how long does it take to see if there's 2 green arrows? Well, about the same time it takes to see if there's 2 red arrows. It just doesn't take very long. And then we're going to evaluate those potential opportunities. So if I have 5 or 6 stocks giving green arrow buy signals, maybe I don't have enough money. In fact, if I'm investing 5% of my portfolio in every position, I can have up to how many? 20, right? I can only get 20 positions on there, and then basically I'm out of money, right? So, you know, as we go through the routine, this might get faster and faster because we just have limited funds. Now, how about a weekly routine? Oh, well, last part of daily routine. Of course, we want to be aware of earnings. We're coming up in earnings season, have a lot of big players announcing earnings over the next few days, but be aware of the earnings and dividends. As you'll notice, the objective of this plan is what? Buy and hold stocks in the S&P 100. Guess what? That includes the Mag 7, a whole bunch of other stocks. When they announce earnings, this particular plan says we're just going to hold over the earnings. If it gaps up, fantastic. If it gaps down, well, if it gives us a sell signal, then we'll adjust our stop and follow the rules, right? Now, weekly routine, and most people like to do this. They'll just take a look at their market posture. All that is a fancy way to say, what's the trend of the market? What's the long-term trend? What's the intermediate trend? What's the short-term trend? And in the description in this webcast down at the very, very bottom, so scroll down a little bit, you'll actually see I did 4 YouTube shorts on kind of ways to determine your market posture. And it's one of my favorite little things to do. But anyway, that's there for your use. All right. Now let's go ahead and go through this and look at some example trades and just see how we would do something. All right, let's start with Apple. I just want to do an exercise with you. I'm going to go back in time and I'm going to zoom in right here at the last earnings. All right. Now, you guys focus on the right side of this chart. Now, on the moving average, just write this down in your notes somewhere. If the price is trading above the moving average, in fact, let me fatten that up a little bit. Let's make that like 3. Okay, a little fatter. If the price is above the moving average, that arrow is green. Okay, how long does it stay green? Well, it's green until it turns red, and that's true of the MACD and the moving average. Okay, so on this day, okay, where my cursor is, there's a little crosshair so you can see the day, but that's the 31st of July. What is the status of the moving average? Is that red or green? Well, it's green. Okay. How about the MACD? Now, again, I just focus on the right side over here. If the MACD bars, these histogram bars, are below 0, then that's going to be a red arrow. And it doesn't matter what color, whether it's that kind of maroony or brick red or the lighter red, it's red until when? It's red until it turns green. How long is it green? It's green until it turns red. Okay, don't complicate this more than it needs to be complicated. All right, so right here, this day on Apple, if I was watching Apple, I want to go through this with you here. Is this a valid buy signal? If we didn't look at Apple, okay, no. Why? Well, 2 reasons actually. This is subtle. The moving average is not rising; it's flat. If you have to squint too hard to see if that's rising, it's not rising. Okay, again, don't complicate this. All right. MACD's red, guess what? We're done with our analysis. We come to home from work the next day and we look at this and now the stock's gone below the moving average. If we did buy this for whatever reason, now we have 2 red arrows. What would I do this day, everybody? Okay, following the rule set, what does the rule set say? The rule set said to put the stop 3% below the low price that day. Why? Because we have 2 red arrows. And then some of you may be saying, well, Scott, what if it keeps going down? Then we're going to get stopped out. We're probably going to have a loss. And I say, welcome to the market. There's just nothing you can do. But the reason that that's okay is because we only bought $500 worth of the stock. We only risked maybe that $50 or $25 or $48 or whatever's comfortable for you. Okay. Now, next day, stock kind of just went a little flat. The day after that or 2, we went back above the moving average. And you can actually see the moving average is rising there. Now, if you really, really want to see whether the moving average is rising or not, look right here. The value of the moving average is right there. If you look right here next to the top line, and I have my cursor that day, the moving average is at 205.71. The day before, it was at 205.35. So technically, that's rising. Okay. The stock went above the moving average. That's a green arrow. You can actually see the green arrow just right there. Let me get rid of my crosshairs now. That's a green arrow. Is this a buy signal? Okay. Now, again, this is all we're doing as part of our daily routine. We're just seeing, is this a buy signal or not? The answer, no. Why not? Well, MACD is still red. Okay, next day. MACD is green. Moving average is green. Guess what? We could buy the stock today. Well, Scott, that's way up there. That's the highest it's been in the last few months. I don't want to buy it that high. Well, guess what? Remember when we talked about the growth investing? This is kind of buy high and sell higher. That's how that works. Okay. And then if we zoom back out to where we are today, okay, that buy signal happened right here on Apple. And guess what? We would set our initial stop where? 1% below the moving average. And it's never traded below the moving average since then. Okay. Now, does that happen with every stock? No. Okay. What's the status of Apple right this second? Is this a valid buy signal on Apple right now today based on those rules? Yeah. Now, is it late? So guess what? Remember how we talked about the three-word mantra: review, refine, and retest. Review, refine, review, refine, retest. Review, refine, retest. You may say to yourself, you know what? I'm not going to buy. I'm not a buyer unless I see that within 2 or 3 days of that green arrow. We're 6 days, 7 days late here. It's still green, still above the rising moving average, still a valid buy signal based on those simple rules. But this might be one of those things that you want to refine as you look at the rules. Now, for time here, I want to take a look at a stock. Well, let me show you a couple things real quick. I'm really getting pressed on time here, but I want to show you a scan. Okay, this scan, the link for the scan is in the description already. Okay, this scan is only good in your real account because we're using studies here, moving average scan and a MACD histogram crossover scan feature. And these study scan features are only available in your real account. The paper money doesn't work with this. So this is a live demo account here that has some of those live features available. All right. So if we're in the S&P 100 and I'm looking for stocks between $20 and $200 and I run this scan, you'll see that there's nothing that makes this. So in order to help with our class today, I actually pushed this out to the S&P 500 and ran the scan again. And then I found some stocks. And what I wanted to do is look at this GLW together today and do that really simple position sizing on this one. So let's go to the charts on our Thinkorswim with that GLW. And I want to ask you some questions. And then we'll place this order. Now the market's closed, so this is going to be an order for tomorrow. All right. So GLW. Again, we've got a rising moving average. The stock price is above that, so that's a green arrow, even though that green arrow happened way back here on what day is that? The 8th of May. This has been a green arrow since the 8th of May on the moving average. Now, what do you notice here on the MACD? Let's zoom in a little bit. So MACD yesterday was red. Today, it's what? Green. So now we have a green arrow on the moving average that's rising. We have a green arrow on the MACD. That's a valid buy signal. Okay. Now, is that guaranteed to make money? Oh, no. And it took me a long time, probably 3 years of trading to understand that a valid buy signal does not guarantee a profitable trade. Just understand that, get that right now. Okay. Right here. So let's do that simple position sizing. If we have a valid buy signal here at $90.29, our moving average is at 78.73. How many shares can we buy? And where do we set that initial stop? Okay, let's figure out the stop order first. So 78.73. And then this is how you get that stop value amount times 0.99. Okay, and that equals 77.94. Someone write that down and remember that for me. 77.94. And then we're going to see how many shares we can buy. If the stock's trading at 90 and we can invest up to $500, divide by 90.29, I can buy 5 shares. Okay, so how do we do that? Well, I can go to the trade page, or I can just do it right here. I can right click about right there at the close, buy custom with a stop. That'll give me an order over here that I can modify. And I'm going to put my order price there at 90.29. And that's going to be a limit order. We'll go ahead and make that good till canceled. I don't know if that'll fill tomorrow or sometime in the future. We calculated what for our stop? We said 77.94. Oops, 77.94. And we could do how many shares? 5. And we want place to trade, went through kind of how that buy signal works. Go place to trade, went through kind of how that buy signal works. Go home or do your homework tonight. Maybe go through some different watch lists and find some stocks to trade in your paper money. And hopefully that was helpful for you today. Have a great day, everybody. Thank you.